Hey, good morning, everybody. This is the professor with Day Trading for Success. So this morning we're going to do the open strategy one more time. We're going to take that out for a quick run and try to make a few $100s. We'll be trading Apple again with 500 shares. Now, remember, with this strategy, you can use any share size. So I'm going to go over with you exactly what the strategy is, and then we're going to start showing you in more videos how you can, after the first 15 minutes, piggyback it into the open strategy stage 2, which is marked on the 15-minute high-low candle after market opens, and then you wait for those to break. So we'll have a strategy specifically designed for that, and then that can roll right into the RV strategy. So it's kind of you can just do the first open strategy and get out in just a few minutes, or you can go on. My advice is if you have a goal of making $100 to $200 a day, the second you get to it, stop. That's what I would do when you're trying to build an account. But I have 500 shares on this, but you can do it with 50 shares. You can do it with 10 shares. If you haven't made the PDT rule, if you don't have 25K, you are looking for that perfect trade, that perfect alignment of the 5-minute, 1-minute chart as the volume goes up after it pivots off a Fibonacci or a pivot line, a profit line, and after it breaks the pre-market high or low for this particular strategy, like right then as the volume increases, go in for that perfect trade right then. That hopefully will be the perfect trade. If it doesn't go the way you thought it should go, get out immediately. And that's one of your trades, the 3 trades you can take a week. So it takes a while to build it up, but then just go back to the sim, practice, study, log. Don't treat it like it's a game. Come back in for the next perfect setup the next day or the day after, whenever it looks like the chart's working for you with the layout or whatever strategy you're going to follow. So here we have the open strategy, 3 different open strategies. We have the RV strategy, the escalator strategy, and a lot of other strategies in the archive videos that we trade, just open scalping and then competition. So you might want to look for those. Make sure you read this disclaimer before we go on. I am not a licensed financial advisor. You should seek the advice of somebody that's licensed, that you can trust before you trade anybody's strategy, including the ones you see on Day Trading for Success. Trade in a simulator. If you can get a financial advisor that says you should even do this at all. But if for some reason you're trying to do it without great advice, make sure you trade in a simulator and make sure whatever strategy you're trying to follow is actually working for you. And treat the simulator like it's real money or it does no good. Like if you lost that money, it's like, oh my God, I lost that money. Although that's a counterintuitive message because as Mark Douglas says in Trading in the Zone, you need to be prepared to lose to get your mindset. So how do we deal with that? Get our share size lower so we can deal with 10 losses in a row, 20 losses in a row. If you start to get 50 losses in a row, perhaps that strategy is just not good for you. But think about that. So make sure you read this and before we move on. So this is what was considered to be what I considered to be the perfect open strategy layout. I have made this available. Some people are still having trouble. I don't know what to say about that. I guess they're going to be making a video. Our team that explains how to download all this sometime next week, I hope. So you should be able to get that. I think it has to do with whether you're downloading it with Schwab or ThinkorSwim. This is now downloaded for Schwab, although I think they're going to be putting both of the layouts on both up there at some point. You should have them, so look back on those videos, as well as the way that it gets entered is a certain way. A lot of people want to click onto that pop-down screen, and it's not what you do. You don't do that. So that'll trick you every time, whereas the layout might actually, after you push Control-V, and enter it in, that it's already there, but yet it's prompting you to do other stuff. But if you just go look in your layouts, it's there, or in your in your studies under the beaker up here. If you look in your studies, often type in the name of whatever you named it or what it came in as if you're doing the scalping indicator, and it'll be there already, but yet it's prompting you to do other stuff that confuses you and then says it's an error and all that, but it's probably not everybody. I know people are very frustrated. So when they hear me say, "What's the problem?" they just get more pissed. So I don't know what to say about that. Obviously, something else is going on that I don't know, with the way it's coming into your platform. Luckily, for the most part, people are getting it to work. Sometimes it's what I'm suggesting, one of those little errors. Other times it might be something that has nothing to do with that is not your fault in any way. And I don't know what to do. The more information you give me on the channel as email or whatever, a picture, the more information you give me of what it's saying, the better chance I have or we have of trying to correct it for you, because I want you to have it. I don't want you to be frustrated at the channel or me. Obviously, the purpose is that you get it easily, and I'm sorry that people are going through that. Anyway, so we're going to move on today. So this layout has been made available in the previous few videos prior to this when they got released, whenever that is. And hopefully most of you have got it to work for you, as well as the scalping indicator. Again, episode, 83, that has a lot of the scripts, is constantly being updated in the information, showing you more layouts and scripts that are for ThinkorSwim. Now, it seems like the ThinkorSwim and Charles Schwab studies are universally go into either one, which is great. It seems to be that it's the layouts that are having trouble. If you're bringing in a TD Ameritrade layout into a Charles Schwab or vice versa, they don't work. And that's why we've been trying to put both of them up. So if that's what it is, hopefully that's an easy fix for you. But if it's something else, I don't know what to say. So this is a 1 minute chart. This is a level 2. This is a 30-minute chart. This is the active trader. This is another 1 minute chart with the scalpers indicator on it, the famous scalpers indicator. This is a 5-minute chart. Then we have the SPY down here, the day and the news, all minimized for screen management. As far as trading, we don't need to really open any of these except this 5-minute chart, which I'll show you the layout right now. So let me zoom in here. So I've marked the Fibonacci level. You probably can't see under my picture here, but the high was 173.69, and then the low is 167.11. And then once you mark those, the lines will spread out and give us support and resistance lines. These thick dotted lines are the pre-market high and low. Let's go back to that for a second. So that's done on the 30-minute, and you mark them on the body. I think I said yesterday that you can look at what the price of the candle is, high and low, but it will give you the wicks. So you just want to mark the bodies, high and low, of the last 30-minute candle to close before market opened. So right now we're on this 30-minute candle between, well, on East Coast time and the New York Stock Exchange is between 9 and 9:30. So this ended between 8:30 and 9. So it depends on when you're watching. But so it's a half hour before market opens, that 30-minute candle closes. Then you mark the high and low. That's what backtesting has proved to be so far the best. Now, you could backtest for 5 years and get a different result. So obviously, there is not enough data. There's not enough data to give you a better than average. There is enough data to give you a better than average pick, but obviously this could possibly change exactly where this gets marked with more and more testing and more people trading. We might slightly tweak that. It's sort of a community of trying to figure out the best way to trade. And then and this is supposed to go for 15 minutes where you're waiting for it to break pre-market high or pre-market low. And then you're getting into when do you get out? When do you get out? If that says when you get in, right? So if we're getting in when it breaks the low, where do you take profit? So we try to find pivot points. It's kind of weird. Those pivot points don't look too good right now. Let me take a look at those. Oh, yeah. So it picked it up. So it picked it up here. That's kind of a pivot point there. This one picked it here, but then it hit a whole bunch more times as it went across. So you're being a little subjective with these. Picked it up here, and then the Fibonacci picked up the spike. And then these are red because I made these red, so it's easy to say we're going short if it broke the pre-market low. We have about 6 minutes, guys. We have a little group with us today to trade. And then it's green if it breaks the pre-market high. So as you can see, we kind of captured some of those where there were pivot points. As you can see here, this one's marked where this must be further. These are marked further back. Let's take a look. Yeah, there's one marked. And then there's some marked here and some marked here. So, yeah, so they're kind of put in logical places where the stock has stopped, turned around, stopped, rested, and then started up again. So all that you are trying to do is to find those areas. I'd actually mark one of these pre-market ones now that it's moved a little further since I last looked. I'd probably mark something right there too. And then I just name that profit. And now we got a new one. So we're going to look at these lines as if the stock goes up, if it's back down here. If it's not back down here, this is ever evolving because we're beta testing, right? So if it's not back down here, we had talked about the next line being this, but people are disagreeing that you just need to wait for it to go back in and break, or go back down and break this, that you don't try to call these profit lines as trade entries. So there's a debate about that still. Today, I will not call them that. I will wait. I have found that my trading yesterday, when I looked at what happened, if I traded a little bit differently, I really liked, I only took that one trade, but I really liked the idea. The problem with all this testing is you're looking at one stock, one given day, and it's a completely different trade the next day, right? So somebody could say, well, all your lines are mismatched. They mean nothing because every day the stock is different. Yes, that is really hard to argue with, right? But you're trying to find a pattern of some sort that works consistently more than 50% of the time. Otherwise, you truly are rolling a dice, right? But in the way your hand moves when you roll a dice might change that too, right? Because there really is no random. If we're smart enough to calc it, there's not such a thing as random. But since we're not, we use that word, random, right? So yeah, we're just trying to see where it's happened multiple times. So we figure out a pattern based on that, and that seems to work. That's what people talk about. Oh, you're looking for an edge. Just a little edge is what you're looking for. Then it's your discerning capability of seeing the volume as it spikes, where, other indicators as they move. So in this particular one, we've kept it very simple. You just have support and resistance levels, you have pre-market break levels, and then you're scalping on a 1-minute chart and you're looking at volume. And it's very simple as far as what to follow. It's not simple as far as will it work. You hope it will. Look, we're back in below it now, guys, which at least that means we have an answer if it goes back up or back down when the market opens, which is in just about 2.5 minutes. So I'll be looking. I'm not going to be really looking at this anymore because this was just to mark. The 30-minute candle does me no good, right? I will be looking here. There was a little tiny pre-market trade I took, 500. The scalping indicator will spring up as my sound is working over here, right? Yep, okay. This should get taller, which will help me, but I can look at these ahead of time. So this scalping indicator is amazing, and make sure you get that on the last couple, 3 episodes or episode 83. And make sure you're downloading it for your right platform, ThinkorSwim or Charles Schwab. So now I will look at the 5-minute if this trade goes on longer than 5 minutes. I will look at it, especially if it goes on for 10 minutes. I'm going to kind of look at possible alignment. I'm going to look at volume, and I'm going to look at the candlestick action a little bit, however, and I will look at level 2 somewhat. So, which is now the typical pre-market. We can't do anything with it. So I don't know if this is going to be a one and done really fast and I'm in and out, or we're going to be trading a little bit longer. So I will call out what I'm doing. I'm calling the ball for everybody, but there's really nothing to call because we all follow the same thing. If it breaks this going up, we want to get in. If it breaks this going down, we want to get in. And then we want to decide, do we want a quick profit? That's only 5 cents, right? Or do we want to wait for the fib and then we go up 10 cents? Or do we want to wait up here and then we're going up 14 cents? Or do we want to go up here? Once we get out, you're supposed to wait until it goes back down and comes back up. So I would tend to hold longer unless it's going down. and then I will not hold longer. I will get out so I don't lose a lot of money for my, I'm ready to try to recover for my next trade. So if it breaks through and then breaks back down, I'm going to get out. If it breaks up, I'll probably hold through some of these, and then if it breaks back down, I'm going to get out and keep some money. So the market is open, as you can see, and nobody wants to get in on this candle. If it even fills you with 500 shares, sometimes there's a delay of when you press it in on your level 2 price. And then, does that actually work? Okay, so that reconciled. That's good. So this is too small. Just going to wait for that 1 minute candle to break. And then we're going to see exactly where we are. I jumped the gun by 6 cents or something yesterday, so I'm going to try to avoid doing that today. Now with 500 shares, you are going to have, the market maker is going to not give you your best possible. You're not going to get, like, if you're going up, you're not going to get like the bid's best price. You might end up with the ask rather than the spread in between. When you have so many shares to fill, it gets a little difficult. So we are on the second candle, but as you can see, there is no way to take this move. So, but it is about to go up. So I am looking at that. It seems like it's about to go here. So guys, this isn't like the RV strategy, which is a lot more money, and I find it to be a lot more fun, but this is a very quick in and out for the day to try to make a living. Okay, is it going to break that? So we're looking for it to break 54. So right here, 168.54 is a better way for me to look than the candles. Just in case they're lagging slightly, look at what the market maker is prepared to give you. And I do want to get in as early as I can if it breaks it, and just in case it shoots up. So remember, we are not going to say, oh, I want to get it sooner. We're going to get it when it breaks it, and that's when we're going to get it, right? So I'm looking for 54. Now you could set that. There it went. Okay, so I'm in it now. It dropped down right off of it. Hit that profit line and dropped right off of it. That's not good. Wow. I'm actually going to get out there, guys. I don't like that movement. So I took that early profit. So I only got $22. So I can't get back in until it pulls down and goes through again. But when I saw it come down like that, see, I'm glad I didn't hold it right now. So we can still trade this actively within the rules. We're waiting for it to break. I'd like to see it. I kind of want to see it break this line now. Now you're legal to go in. I say legal. I mean, obviously you can trade this any way you want. These are guidelines, right? And I'm not a licensed financial advisor. So you're going to want to, find your own path. And these are just guidelines people are testing and using that seem to be effective. So we made a little bit of a good trade there, but now I kind of want to see it break that. And I could have gone in there, but see, the same shenanigans happened again. So I'd like to be a more discerning, so I can maybe get up to this profit line, but enter right down there. So, somebody just held through the whole thing, huh? You're red again. I mean, that's one way to play it, but I would not like to be down here right now. So that now, okay, so now you're out. So that was unfortunately a pretty big loss for you. So yeah, I just quickly reacted here and got out. Now we might end up playing this short. That's how undecided this is. So you do have to use some, your discretion with some scalping skills. We cannot short this if you follow the rules, the guidelines anyway. You can if you're just scalping. Now, Apple's a really tough cookie to scalp as far as, especially with this share size, because you're going to get slippage and you're going to get not the perfect spread, and it just doesn't move very much. So you're looking for something that's a little bigger move, or you're planning to maybe trade it on a 5-minute candle, hold it a little longer. I mean, this is definitely a pattern right here, but and remember to call it your pattern. So this is a good time to talk to you about finding the perfect trade in Day Trading Volume 1. Read that book, read that for the RV strategy and how to gauge your perfect trade by lining things up. And then Day Trading Volume 2 is going to talk to you all about the patterns, which I don't even want you to look at and read until at least after the first 5 minutes and maybe the first 15 minutes before you really start looking into patterns, and so that you have enough people, noticing the same patterns, so that, because patterns are, the more people that see them, then the more that they're going to be accurate, right? So, and then Day Trading Volume 3 kind of finishes that. And then what I was starting to say earlier about your mindset, trading in the zone, having a mindset of accepting losses, that you're just looking for a little edge to take you through. And I know I just repeat this over and over, but this is for the new people watching. So trading in the zone, Mark Douglas, really helps you come to terms and to grips with, the humanity of your trading, what you have to realize, and exercising patience and looking at the bigger, longer picture. And then Best Loser Wins is another one. I'll have a link to those 5 books that I recommend you read them all and become a part of them. I'm going to wait for this break, guys. I'm going to tell you right now. So it's just too much at this level that it can slip me right out of a profit in a split second. Now, what he talks about is not trusting patterns quite as much, which is great to have another point of view, but then also letting your winners run. Like, don't put a profit target, put a loss, put something that protects you from loss, put a risk management loss target, not a target, you don't want to hit it, but when you want to get out, an anti-target. So, and that's what he really believes in. Let your winners keep running until there is definitive evidence to take the trade, to get out of the trade. I mean, and it makes so much sense when you read it. He has a bunch of other stuff that's really cool too, but I think I've mentioned a few times that one really resonated with the way that I trade. People kept telling me, get out at your, set your profit. Don't overhold your position. Don't over trade. And I was just like, it seems so counterintuitive to me. It's like, well, all signs say it's going to continue to go up. Yes, there's no guarantee about anything with a stock. Every trade is a different trade. Every second's a different trade. Every second you have to look at it different. But if you calc it every second and everything says, I still think this is going to go up, until it makes a couple of moves against you, like consistent, like, hey, I'm down $500 because I didn't get out. I've lost $500 of my $6,000 profit or whatever because I didn't get out. I don't want this to get down to, $5,000. I think it is turning around now, so I'm going to take it, but not just get out because, well, I made my 5,000, I'm out, So that's just what so having that perspective is good. So there's many different perspectives and books. The books that probably I don't get as much from is the ones that just say how to day trade, how to make a living day trading, how to just, and they're just general news. I mean, I guess everybody needs to read one of those books at some point, Everybody needs, Day Trading Volume 1 kind of covers that pretty simply in a workbook. But, I read a few of those books. I'm guilty, and I'm not calling out authors or anything, but they can only take you so far, God, it's just sitting here, guys. And then you need to get into the brass tacks of how do I trade, man? How do I trade? And those books don't seem to have that. That's why, Trade in the Zone, Best Loser Wins, Day Trading Volume 1, those 3 books alone basically tell you how to trade, and then the Day Trading Volume 1 has an actual strategy and worksheets to follow along. You can't, I've never seen another book like that. That's why I like what the $1 Million Margin Club did with that. And I'm so glad they're coming out with an open strategy book as well. So yeah, so there's that. And then on this channel, while I've got all this time, I will Advertise the channel, because we do not sell courses here, guys. We just ask that you watch and subscribe. Everything is free, and we're just trying to make entertaining videos that can show you some tricks and tips and maybe some strategies you might want to follow after you seek professional advice and trade in a simulator. But there's tons of trading archive videos that you should look. You should watch all the videos between 3 and 5 times, and then we will guarantee you will become. No, I will not guarantee you anything. But anyway, but you should watch all the videos 3 or 4 times. But anyway, no, there's a lot of them that show all these different strategies, which is really cool, because after a while it starts to click a little when you see them, like, oh, that's why that level's there. That's why that worked, or that's why that failed. More than that. And you kind of get the idea. The more you can watch of, actual live trading moving, whether you're watching sim trading, live trading, your best friend's idea, whatever it is, diagrams in a book, just the more you take in. Again, I want to wait for this line. So let's see. How late are we into this? So we still have technically 5 minutes left of this strategy. So that almost broke it there. Is that it? I'm going to take that there. So that's not the best position. Damn it. See, look at that. Look at that. You see that? All right, I'm going to try to hold through this. I should have waited for a real break there, I should have waited. So I would say that down here is where I would be forced to get out, like 1623. And this will be a losing day, guys, because I will be at the end of this strategy. This has been really hard because it didn't really break it. So I'm holding hope that maybe I can recover here. I could just get out now and call it even as it sprang up here. Yeah, now I'm plus again. Oh, but now it's finally broken it. Okay, so there's the fib. Guys, okay. Is everybody's green again, so that's good. Man, it did it to me again. Did you see that? I was looking up there, and I should have just taken that profit on the fib. That could be it. I mean, I should have snagged that and just called it a $50 day or whatever that was. Now I'm $50 down again. This is Apple. Apple is just not the... I know they were working on the scanners on this. Everybody was trying different scanner readings. This ATR is a typical 3.5. On the swing strategies, they're splitting the ATR in half to figure their share size. I've been watching that and really interested in the swing strategies. Look like a lot of fun to take, and just take 3 or 4 positions, but keep your share size really low. And then if you get, obviously more winners than losers, then you've won. So man, 500 shares can put you down quick here, huh? So remember, yesterday I got 200 and whatever, even with the fact that I went in early. I think it was like 225 or 230. So I'm going to balance this out at the end of the week and see, obviously I didn't trade it all 5 days, but I did a different open strategy the other day. Wow, there we go. So now I am very tempted to just take a profit here. So let's just see if this is going to ride past the fib. I just don't want to be red. Not as good as I would like it here. I'm not taking my eyes off this, guys. I'm not going to look at how you're doing. Damn it. It went back down again. That's where I was at 22 before I took this second trade. Can you get me a little higher there? It's starting to move up. Damn. There it went right back down again. That fib is being respected, huh? It's just dropping off that fib. What are we at here? So we only have a minute left technically before we break into the other strategy, which I wasn't going to actually trade today. There's the highest I've seen it get for me. So it broke off the fib again. Oh, there we go. Is it going to? I want to see it. There, it finally broke through that fib. There we go. There we go. Blow up to the 81. $70, get at least up to the 81. I'm struggling to make a little bit of money today with 500 shares, huh? Painful. But I mean, this is probably realistically what you should expect to happen with this type of strategy when you trade a really, really safe stock like Apple. You know, you might lose $50. You might make a few hundred, but you want to try to cut your losses like no more than $50 or $70 at the most. And then hopefully you have enough at the end of the week where I'm holding through this move, guys. I don't see the point. Otherwise, I want to get it to be a little bit more money here. So I have faith. It is swaling up here. And a lot of people have probably jumped in this move, especially on the fib. A lot of people might have jumped in. So I'm going to hang through this and see if it gets up to the 168.80, maybe up to 169. I'll see how the price action is. It goes up, maybe get to $100 out of this or something. I'm just crossing my fingers. It's going to make some more price action up here. There's an indecisive candle here. That is there we go. 75. I'm looking at the market makers. 73, 74, 76, 77. That line's at 81. Can we? Oh, it looked like it was going to really blow through it there. 81. I'm holding that. That's 85. 86. 80. I'm going to take that. Where did I get that? Oh, I don't know what I got it at because I sold out. But I got $172 by waiting for that. Whew. Huh? So it turned out to be an okay day. So, yeah, this could just keep going now, of course, and I'm acting all dramatic, and it's just like, dude, bought it here, held it, and you got up here now. Just calm down. I hate those people. We are scalping people. We are not holding for trends. So, but yeah, that could have worked. You know, if you could have lived through this pain, you know. It's a different way to trade, right? These have their own guidelines. So, but that's not bad. So yesterday was whatever it was, 230, 40, something like that, after you deducted my little mistake, and then 172 today. So we're averaging pretty good on this strategy, guys. Not bad. Now, what I've seen for the 15-minute strategy is you would be looking at a 15-minute chart. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 940. What am I doing? I just count to 945. So 945 right there. So you take the high and low of that distance. So you would just have a 15-minute chart, but we can do it here. So you go here. We'll make that white. Save it as the default. Say okay. And then we'll mark where they would have captured the low on the body, which probably would have been about right here. You just open up a 15-minute. And then that's now the level that you'd be waiting. So as it broke it, you'd be now trading long based off these two lines. So let's just see for a second what would happen. Now, there are other profit-taking lines, which I do not have up here, and a different fib. So there's a bunch of things would change, but it is a continuation of break a level and go. So this would be like a different marked line, and it does seem to be kind of respecting this, which is interesting. I mean, it's not happenstance random. You know, depending on what, you can watch all these YouTube channels, and there's so many people that call out this strategy. I haven't actually seen it in a book or anything yet, or any back testing other than like YouTube gurus. But they're probably, because so many people believe in it, right? It's the collective lemming mind that makes these things happen. That's a pattern, is a repeat of other, something that already happened. So we're just our human emotions are gonna repeat the same stuff, So, patterns can be trusted basically because of the way humans are, So now you look at these, and now you start reading patterns, right? So you have a spinning top, you have a hanging man or a rickshaw man that both say reversal, and there it goes. So these both called for this to turn around. So I would be a little worried if I had a profit up here. I think I would have taken it at this, probably at the first line at the spinning top, and then been waiting. That's probably how I would have traded this. I got out waited for it to break through the level, which it just did. This is the new level, remember, and then waited for it to come back up, probably on the next candle. If it comes back up strong the next candle, then I'd keep playing it long. But I would have taken the first profit, which would have been 84. Well, that's at 83, right? So it went all the way up to 94. So you got 11 cents, 500 shares, $55. I would have made 55 on. Maybe there's some slippage. Call it $40 between that got in and got out. Now you're down here. I'm just kind of giving a strategy as we go on, and there's the new, and it's starting to break that. So you're bouncing on the 9 there. You can see that. So that's helping it out. It's kind of springing it up, but then boom, hit the 20 for a split second. I don't know if the price action went down there. That was just a shadow wick based on sensitivity, but it does look like it's going to turn around here, right? Guys, this is a hammer. If it continues to form it, it's a little too soon to call it. It's still 30 seconds, actually. So I don't know if this is helpful, what I'm doing here, but I'm just trying to call out the live trading as I see it. But 5 minute, look at the 5 minute. So why are we talking about all this nonsense? It's going up. It's an upward trend. Just stop all the nonsense. Get in and ride it, you know. So there's that logic. So I would have gone in here. So I've gotten in the same position. And then I would have probably take profit similarly, but I would watch this volume here. Look at how strong the volume is here and the scalpers indicator. So I would have stayed a little longer until it starts to drop off and then popped out if it's going to drop off. So is it going to drop off? I don't want to hit this line. I want to take some profit. Yeah, it's going to shake me out here if it starts to go down into this candle. I would just take the little bit of money that I could get and then wait to ride it back up again. So this is me trading. This is what I would have done. I'm not trading right now, but this is what I would have called it on this strategy. I probably should have just taken the trade and think about it. I was just trying to show you this strategy this morning, but now, luckily, I held through it. And if it's going to break this, let's see. Go up to the nope. There it goes. So if I didn't sell, I was close to selling right there. Very, very close to selling. I probably would have. It probably would have shaken me out right there. I'd be out of position now, waiting for it to go back down. Yeah. So this is basically a shooting star or a inverted hammer telling you that it might go back down. So I'm a little worried. It's an indecision, and I got out. So I'm not in position if I was trading this. Just the way I would have read it, and I would have lost a better trade. I still would have been green here, though, because I would have gone up from here, 83, up to probably 4 cents, 4 or 5 cents. Wow. And then I would have missed that glorious move. So, yeah, now you wait for it to come back here, and they're still working. See, now these lines might be different on the 15-minute. That's the thing. These are, yeah, so this isn't really right. I can't. These lines all become in a different location. So the support and resistance levels. So anyway, all right, guys, I hope that was helpful. Look, we did good again today. Now, lower share size, you might just have $10, $20, but, you chip away, adding money to your account, and then go on about your life. Or if you're lucky enough to have enough, get it funded, at the end of the week, say you average $200, you've got $1,000 or $4,000 a month to add to your monthly bills. And certainly that should be enough to not have to work overtime or a second job. And maybe, depending on your budget, it's bad to trade to only have trading as your income when it's that tight. It's better to trade and somehow get a job that can go around. Like if your job starts in the afternoon and you're allowed to do this, then you have a backup plan where there's not so much pressure, the psychological pressure. Anyway, I'm not a therapist, so I will get out of talking like that. And hopefully, guys, this was enjoyable. Don't forget to give us a thumbs up, and I will see you down the road. Stay inquisitive, stay green. Have a good one.